Good morning, guys. It's Tuesday morning, September 25th, and hope the guys are ready, loaded up, and ready to go again. Looking at the economic calendar, there's always some fun stuff happening overnight, right? So, looking at the economic calendar today, the FOMC meeting begins, and focuses on that, obviously. So, we're going to probably get more of range-bound markets, I would expect. Or that's kind of usually how it goes, but you just never know nowadays. I think the last time we had this FOMC meeting, we had a pretty big move ahead of it, so we will see. But for the overall expectation right now, at least that market's going to kind of slow down a bit. In expectation, if it's going to be a rate forecast, from what I can tell, people are actually expecting a forecast a rate increase. That's kind of what people are expecting. That's kind of an interesting aspect, isn't it? So we'll see if we get the rate increase or not. The higher interest rates are not necessarily bad for the economy. Just makes the cost of money something more important again. So looking at our news on tap, we have the FOMC meeting beginning this week today. News announcement is tomorrow at 2. We have at 9 o'clock, we have Case-Shiller and the price index, the housing price index. And then we have consumer confidence and the Richmond Fed at 10. So I think 10 o'clock will be more of the reaction to anything when consumer confidence comes out. And then, of course, we have a 2-year auction at 11:30. I don't think that's going to do much for pushing anything around, and a 5-year auction at 1. So we may get some impact on the bonds, probably not a whole lot, but probably a little bit. But the auction week, so we had 2-year auction yesterday, we had 5-year auction today, and the 7-year auction is on Thursday. So anyway, we have some news to pay attention to at 10, and then we'll take it from there, right? So let's just dig into what actually happened overnight. And where did we leave it yesterday? So yesterday, we said that the market was stuck in a range, right? They didn't get a lot of early strength. They came down here and tested the key level at the 17, 18, 19 here. They couldn't take it out, right? And we traded back and stuck in a range. And I've been expecting a test of the high all day yesterday, and I said, well, we'll probably get that in the overnight then, and yeah, we got it. So here we go. We had a test of that of the highs, and they busted through that. I just took this range, I had a bigger range here yesterday, and made it a little bit narrower because at this area, this high volume node up here, became a little bit more important. It took it right up there and stopped it. So that's going to be a key area to look at, or at least an intermediate area, right? Looking at the capital flow chart, we are still trading in this range here. So I'm not going to say that we are just totally pointed higher. I would call us more range bound right now. We couldn't take it a lot higher. We have backed off all the way back down here to that key support area. We held that. And right now we're trading building value here in the middle. So we are in an area of building value on the ES. If I fold this back together, you can say the capital flow is pointed higher. So I would call it range bound with a higher bias. If you look at that, capital flow. So range bound with a higher bias, and these two volume nodes right there and right there is where we want to take a look at, and we're probably going to be trading between those until we get a piece of news we can move us higher. And that's the 29, 36, 37 is a high volume node on one side, and 13, 14, 15 here on the low side. All right, so capital flow is range bound with a higher bias. The exchange member view is range bound with a higher bias right now. They're trading it, taking it higher in overnight. You split out the London session, that's where the move started. And then we'll see, they have this area just marked out to get through. That's a high volume, it's an attractor. That's why I pulled it right up there. We have to get through the 36, 37 area. That's that high volume node it's trading between. And if it takes that out, then we can look at new highs, right? So these are a few pretty critical areas it's trading at. Now, if you can't take out the 36, 37 area, we're probably going to trade back down into this range between the high volume node down here at 13, 14, 15. We just pointed out it's right there. And the key area to get through is really here, 16, 17, 18, 19. So that's the area they need to hold. If they hold that area and they can hold up here at 36, 37, we'll be in this range. So we have our edges to watch, and then we'll see how strong it's going to get. It looks to me like with a looming Fed hike and trade war with China is going on. That's full speed. They stopped talking. They're probably not going to talk until after the elections. Market is showing some pretty good strength. So I would not be surprised if it's going to make it run at the highs here. At least at the retest of the this area up here. It's trading right up here now, but I'm expecting a test here right from the get-go when the market opens, and maybe even a test of 36, 37. And then we'll see if that holds. If 36, 37 holds, then we are going to be back in a range again. I'm not sure we're going to trade a bunch lower. I don't think the bottom is going to fall out of the market. It's probably going to be more range bound with a slight upward bias. So we have the F1 range bound with a slight upward bias. We have our F2 screen it's range bound with a slight upward bias. So that's where we're going with this morning. And then we'll see if they can take these out, these two levels, then we're going to stay range bound. All right. So that's about it for the EES. We have a game plan there. We have our levels. Looking at bonds. And where we left bonds was a test of the lows. And we actually got the test in Q. That's the very last period before the session closes. And they came right back down here and tested it to the tick at the close. Okay, look at that. And then they said when the overnight session started, took it lower. They took it lower. So range bound to lower is what we said on the bond, and that came to fruition. So right now we have a new level of support established down here at 1670, and it's pointed lower. So I'm looking for some early strength this morning, and then see if they can take out the low and or go lower. Looking at the capital flow chart for bonds, it's the same thing. It's pointed lower. Now you have these two price levels here at 40.04 and 08. You see this little gap in there? That's something which they may want to fill out. So I mean, if they can't take this lower pretty much from the get-go this morning, I can see it trade back up here and test these two areas. It's these two areas. The highest session high, they had to get through that one first, but then the attractor here becomes 8, 9, 10 up here. And that's right here in this area. And that's going to close those two. It's not single prints, but there's a little gap there. Probably want to fill that out. So I'm looking at some early strength to get short and see how far they can take it on the low side. And if they can't take out the low, I think we're going to be heading back up here. I marked up this level up here at 10, 11. And you'll see that if I fold these guys back together, you'll see why I did that. See how this comes together? This is a high volume node right there, and it just begs to be, it just attracts prices. So this is where it's going to go. If it can't take out the low, it's going to come right back up here to 8, 9, 10, and then maybe even higher. So we'll see if this move to the downside is going to be a one-off, or they can extend the range here this morning. But I'm looking for them to extend the range pretty quick this morning if they're going to do it. And then we'll see. All right, so split out why. So range bound with lower prices, with a lower bias on bonds this morning. And I'll just be looking for it. Right now they're taking it higher. It's just starting to move it higher. So I'm looking for that early strength, and then we'll see if they're going to stop it up here at 40, or maybe we stop it here at some intermediate level and then start trading lower. All right, so range bound with lower bias on the bond, and that's both the F1 and F2 are confirming each other, so that's pretty strong analysis. And then we'll see how that develops. Now in trading, nothing is certain. A piece of news can change everything, or a big institution can turn it upside down. But we are talking about structure, and we are talking about expectations and probabilities. So that's what we are working with. Let's take a look at oil and gold. Let me see, flip the guy over right there. So oil and gold. Looking at higher prices for gold, for oil, it's holding its gain. It's building value to the upside. They haven't tested the highs yet. 72.75, 72.75 area, and 72 is now a new area of support. We have 175, and that's a key area for them to hold if you're going to keep it. If you're going to keep trading higher. So they have actually moved away from this area, 71.30. That's a key area as well. If they can't hold this, we're going to trade back into that range we had before. Let me pull up the capital flow chart and show what it looks like. All right, so the range is down here. That's if they can't hold the area up here, 71.30, this area, which they busted out of. We're going to come back right into this range, 70.50, but it looks very much that they want to take this higher. So the capital flow chart is pointed higher. So range bound with a higher bias on the capital flow chart. And the F2 is confirming that too. It's building value on the high end of this. On the top part of this, this part of the distribution yesterday where it wasn't trading a whole lot. It's been trading there overnight. And it looks like they want to take it higher. So we're going to go with a range bound to a higher bias on oil, and then we'll see what they can do. If they can't take out this area, 72.75 or even 73 up here, if they can't take those out, we can potentially trade back down again. But I don't think we're going to get the oil market falling out of bed. Looking at there's some geopolitical things going on there, especially with OPEC and them not increasing the production. They basically sat on their hands and let it instead of increasing it. So I would probably expect our domestic producers to catch up and start producing oil and in larger quantities and basically cover any shortfalls. But right now it looks like people are trading it up based on based on OPEC not raising any output. So we'll see how that develops. Probably oil pointed higher for a bit, and we'll go with range bound to higher prices on oil. So we're looking for some early weakness, see if we can get on a long, get a long setup, and see how far they can take it. Looking at gold, range bound gold, I would call that. Capital flow chart on gold is range bound. We are bouncing between these two high volume nodes on the capital flow chart. We are not moving in any specific direction, and we could not extend the range to the upside yesterday. The overnight hasn't done much of testing the highs, and I was expecting a test of the highs in the overnight. Haven't gotten that. We may get that from the get-go here this morning, who knows. But it looks to me like they are trading in this range here between 9 to 10 and down between 1200, 1201, 9 and 10. It's in a $10 range, building value. And so the F1, our capital flow chart, is range bound, and our F2 is range bound with a probably slight lower bias, the way this overnight has been building. See, it's been putting the mode has been moving down in that distribution. So some early strength to see if they can take out the lows here is probably what I've been expecting, you know. See if they can get some early strength and test this area here. And then if not, they can't take that out, they probably can trade back lower again. But I'm looking at probably range bound prices with a slight upward bias to get started this morning. And I'm looking for a test of the highs. So these are a couple of different time frames, especially when you're range bound. You kind of have to put that together. So the few days, a couple of days worth of time frame on gold, I'm looking at this trading back down again to the testing the lows. But before you can do that, I'm looking at the test of the 9-10 area here. Yeah, 9 and 10 area. So very short term, a test of the highs. If you can't take it out, you can take on the short side and probably trade back into this range and or test the lows here. So that's what I'm looking for on gold. And then let's see how this whole thing plays out. All right. So hopefully gold wasn't too confusing. That is a little bit more interesting because you're in the range and you have different time frames competing on what potentially could happen here. But I think we were pretty clear. We're looking for some early strength from the get-go, see if they can take out 9 or 10. If not, then we're looking at the short side and see if they can take out the low session lows and or lower. All right. So that's about it. Flipping back to bonds and to the ES. And let's see what happened. The ES is moving higher now. It's right about to open. And we'll take it from there. So I'll be quiet. Remember, we have our idea. We just went through that idea. We have our levels drawn up on the chart. We have our setups. And we're looking for a trigger. If I get all those 4, we pull the trigger. You're not gonna. If you don't have those 4, have a good reason for it, right? So good trading, all. I'll be quiet and I'll see you back when the London closes, and take it from there. All right, later. Alrighty, guys. Sorry, I was just watching my trade here, so I'm not paying attention to the clock. But anyway, we'll see what happens. Let's take a look at the markets. If you haven't paid attention, you know that Trump has stirred the pot at the UN pretty good. You know, there's a good long speech, and he pretty much targeted everyone. So everyone got a dose of Trump today. Anyway, so let's take a look at the market. After this reactions probably come from that kind of speech. People are trying to trade it. But you see, we had the ES start trading. Oh, my dog's going nuts. That's what happens when a squirrel peeks out and you get attacked. Anyway, so looking at the ES, we were expecting a test of the highs here to get started this morning, but they just did not do that. They traded down and decided to test the support areas first. So that's what they've been doing, testing support 1, 2. They haven't taken out that key area 17, 18, 19 yet, and they're just now back range bound. So range bound we are on the ES. And, you know, it's just FOMC meeting and all. I think that's kind of falling in place. I mean, usually it yields a range-bound day, and today it kind of did that. So looking at that, there's been not much more to say. We're back into the initial balance range on the ES. And as you can tell, outside in trading is the ticket. Now this run down here wouldn't have been obviously an obvious thing. It ran down pretty quick, but usually you see that how it bouncing off the initial balance low, and that's also the first standard deviation, and the same thing on the upside. So just watch your risk, and you know, get in on it and see if what happens, right? Now looking at the bond, and as you can tell, the bond didn't go and do anything. I caught myself twice this morning doing stuff I shouldn't be doing, right? So I looked at this up here, and this is an example of what happened yesterday, right? So looking at the bond, I was trying to get short up here before right after the open, and I just didn't like what I was seeing on the auction process, so I canceled those orders. And it turns out that they did exactly the thing they usually do, right? You have this area of stop in the market, and then they just tick it up 3 ticks above, right? And that's just to shake out all you guys who got short here with not too much of a stop, right? 2 or 3 tick stop, boom, you're out. And then they can fade it back, take it back down again. So that's the issue I was looking for yesterday. Remember, I missed out on 2 trades because of it, and that's just how it goes, you know. Sometimes they do it, sometimes they don't, and you just have to be nimble about it. So this is what I was looking for this morning or yesterday. This little action here. Now I actually got to show you what I'm talking about. as a good example, right? You get short here, and they squeeze you out, and then it goes your direction. He's like, oh, dang, how did they know? Well, they don't. They just know that you're putting your stop right outside the obvious, and they're running it. That's how they do it. Now, looking at this, I tried to get short over here, and I caught myself. I'm still in the initial opening area, and I'm thinking to myself, dang, what am I trading here for? I mean, it's just, it's in my warning zone, and I'm taking on a trade, and so I canceled it. Caught myself, canceled it. Turned out to be, yes, same thing there. They ran it up and stopped me out. So got myself out of two bad situations, and I'm watching this go sideways like this, absolutely going nowhere. And I'm just thinking to myself, well, at this point, I'm just going to sell the edge and see what happens, right? So I've done that, sold the edge. Right now my stop is at break even. And it's trading at my target, right? It's trading at 25, which is my target, and I should be up soon if it comes down again, or if they stop me out. I don't know. We'll see. I'm still holding on to my target down here at 25. We'll see if I get it or not. It's always like this, frustrating. I have to sit and watch paint dry. But when it trades like this, you kind of had to put you're not going to get the trigger you want to see when you have it trading down, because you don't have any range to work with. So you have to, at this point, just put the order at the edge and then hope for the best, and that's what I did. And we'll see if I get lucky on it, if it turns out it's going to work out or not. Let's see here. It's coming down 700 contracts ahead of me. Not ahead of me. I should be ahead of that, a few of those. So we'll see. I'm going to flip it back here and take a look at oil while this one is developing. Unless you want to see it develop. I'm still recording this, so it should be fine. But anyway, we'll switch back to it to see if I got lucky or not. What I can do now at this point is if it's trading like at my target like that, I can come down now and say I'm not going to lose more than one tick on it. I'm not going to lose anything. I have one tick profit target. If I get stopped out, so be it, but at least I paid for commissions at this point. So I'm going to be watching this, and I'm going to talk about oil for 2 seconds, oil and gold, and we'll switch back and see if I got lucky or not, right? Let's see, oil, range bound. We said range bound to higher prices on oil. We are just range bound. We came up here, tested the highs, took out the stops outside the obvious, right? Stops outside the obvious, that's what this is. And we traded back, we tested support, and now we are right back into the middle. And that's it, not more than that. So, range bound on oil. We still have a range bound to a higher price target on it, but it's not really moving any which way. So, we just call it range bound with a slight upward bias. And then we're going to look at gold, and good grief, gold is doing the same thing to us, right? It's just doing nothing. Just sitting here, doing its thing, and there we go. I may cancel my stop. I just got filled, and I have my little target going. All right. So oil gold is not doing much of anything. Range bound, very narrow range. Hasn't even tested yesterday's high. Hasn't tested yesterday's the overnight session low. Just sitting here sideways. So you guys trading gold, you kind of have the same kind of decision I had to make, right? When it's trading like this. One option is you identify it and you take your shot, just put out the order at the edge, and hopefully it holds, right? So range bound with a slight upward bias, but primarily range bound. And I think all this kind of hinges off the FOMC meeting is in progress. The market is not going to do a whole lot of anything. The stuff which was kicked around here earlier on today is mostly related to Trump's speech at the UN. And I tell you, he dished it out to everyone in the room. I listened to it, and it was actually amusing to see, especially when they put the cameras on the people he's talking about. You can like him or not, but it's fun to see people's reactions. All right, so we're back to the bond and to the ES, and you see I got filled, and I had my target sitting here, and this would be like a perfect. Now you notice my expectation in this trade was only 4 ticks. So I'm not expecting a big run to the downside. I usually leave my target a little bit further down. But the way this whole thing was setting up, range bound, I'm just looking for a trade back to the middle. And the middle of this one was the mode. It's not the initial balance range I'm looking at. I'm looking at the actual trading range, which would be from 29 down to 23, and you see you have your mode here right in the middle, the mode right there. That's the one was my target. So you put out your limit at the edge, you get filled, you work it, and then after a certain amount of profit, you can decide if you want to move your stop loss to more aggressively or not. But this would be a pretty classic retest failure type of trade. The only difference with this trade and normally is that you can't wait for the confirmation down here. If you wait for the confirmation, you have no range to work with. So when you identify a range like this, you can trade it the way I did it right now. Right? And as I said, this is all real money, live money trades. And one thing I should point out, if you guys have an issue with emotional capital, in other words, you get all freaked out and you go away feeling like your heart is pounding after a trade, putting on a trade with good trade location takes that all out. I mean, you may lose money, but if you feel like you did most of it correct, you are kind of at the level, at least at a level which means something. You're putting on your trade with good trade location and so on and so forth, and you're managing the best you can. At that point, you know, the emotional capital you spend is minimal, and then you can go on with a pretty clear head. All right, so I'll leave it at that, and then we'll cycle back to this at 1:30 and see what actually happened. I'm still looking at range-bound markets primarily going forward. All right. Hopefully this was useful, and I will be quiet, and then we'll say cycle back at 1:30. Alrighty, guys, you have a good one. All right, guys, I'm sorry. I have not paying attention again. busy coding stuff, so sorry about that. And take a look and see what's happened. Or not happened. You have the ES is making a push for the lows right now. They've been sitting in a range for quite a bit of time, and right now they're testing the lows. They're coming right back into they busted the session lows. They're right back into the critical area of 1718. They need to hold that area for this to be able to for them to be able to trade it higher. So if you look at what they're right at this three-letter ledge. You have another big area of support here at 1516, but this is a low volume area, low volume node, and you have a three-letter ledge right at it, and that is a critical support area. So we need to hold this area, and haven't really tested it yet. They're coming real close to it. They bounce back up again. But chances are they're going to run it on and do a real test of it. So we'll see if that holds up or not. Now, if they take this out, we can trade lower. If they can't, we're probably going to trade back into range again. So let's watch that, and that could set up a nice long for you guys trading the ES. Just depends on how you had to watch the auction chart at the time and look for a good setup. But it could set up a nice long for a retest of the high end or higher. So that's the story on the ES, something to watch there. And looking at the bond, there's been a couple of more trading opportunities on the bond. If you're trading outside in on the bond, I haven't taken them. I've been coding, so I would bet there. These are opportunities. You see, I came down here. It was trading at the low right there. You can have gotten in at 23. Probably not at. Let me see. At 22. If you look at the auction process here, you see here you had this one as at 11:30. Which is right about here. So you couldn't have gotten in here at the very low. That would have been that bar there. You would have been best would have been 23. If you got in at 23, you had to trade up to 26. You have maybe a two tick back to the mode. And this guy here, you could have gotten in at 22. You see how many contracts traded there? You could have gotten in at 22. Or 23, and you probably had a two tick potential on that thing too. So it's not any big trades, but you know, you can scratch together a few ticks at a time. You know, that's kind of the name of the game when you don't have any range. You know, but you can also see that they're building value here to the low end of it. And remember, our prediction or our forecast this morning was range bound to lower. See, don't forget that lower part. I mean, that's always in the back of your head. At one point, they may take this lower. So, trading from the long side or from the short side, and we're trying to get in at higher prices is probably a better setup. But you know what? You can scalp to get a few ticks here and there. And if you if you're wrong on it and they start trading lower, you probably have a shot of scratching it. So it has to be very nimble if you're going to do that. So not a bad trade, even if you get in on a very low or a tick below it. And if they start trading it lower, just scratch the trade and don't look back. So opportunities are there. Let's take a look at oil and gold. And a lot of talk about oil right now in terms of high prices going higher. But I mean, you know what? They haven't really taken it a lot higher. It's just range bound. You know, they're holding it around 72.50 here. Right, and then they couldn't take it higher, traded back down. They tried to take it lower, couldn't do that either. They just ran stops outside the obvious. You know, this is typical exchange member behavior. So you have guys sitting here with stops below 72, and they just ran a few of those and then traded back up to the middle. So we are range bound, still with an upward bias on oil. Okay, they're going back and forth a lot about where oil is going to go. And how there's going to be a supply shortage because of OPEC not going out there and adding production, increasing production. Neither is Russia, by the way. But my personal opinion, that's my opinion, is that we have a lot of domestic producers here in the U.S. and these guys are going to start stepping it up. As prices go up, they're going to ramp up production, and too bad for OPEC. They're just going to lose out on that, and they're going to keep the prices in a decent range. Finally, gold is not doing much of anything. Tough trading on gold today, but it's the same as on the bond, right? You have a narrow range, and if you're a gold trader, you just have to step in front of it, and that's always uncomfortable. I would say it's easier on the bond than it is on gold, because gold can do these crazy moves, when someone unloads a big order and you just get crushed. So I would understand that it's a much tougher trade to do on gold, but it's range bound. That's what it is. Have a slight higher bias given where it's building value right now, but it's straight range bound, and as long as it stays above 1200, 1202 here, it can trade higher. All right. So the F1, the capital flow in gold, is strict range bound. If you look at this, capital flow, yeah, strict range bound. They're building value right in the middle here. And the F2 is just giving you a short-term upward bias, but a very short-term one. So range bound with a slight upward bias. So that's it for those. Let's take it back to bonds and to the ES and see what happened there. There you go. Back to the mode it is. So if you were long 23, you had probably at least 2 tick of profit. And going on a 3rd tick, that's not more you can expect. It's important to, there you go, there you have it. So it's important to have the trade expectancy correct. You're not going to get the huge trade on these. There's going to be a few ticks here and there, and it looks like this. And by tomorrow we should get the more fun day, right? Then the announcement comes out at 2, so maybe a slow morning, and then a little bit more action in the afternoon. You just never know, right? So we'll leave it at that, and I will be back at 3:30 for a wrap-up and then a forecast for the overnight. We'll leave it at that. So keep at it, and I will see you back at 3:30. All right, guys, time to wrap it up for today. Take a look and see what's going on. Has been going on. Nothing really new has come out. People have been digesting all the news from today. As you can tell, we traded up earlier this morning, tried to bust out some highs, failed at 29.34. We never actually get up and tested it. I marked this up in the morning as it just after it tested it, and was expecting a retest of this area, but no. Right from the get-go, we started trading lower, tested support, and tested the lower support. I haven't busted the key area here at 17.19 yet. Been trading and building value here, but you see the mode has been moving down in this distribution. And you can tell that the point of control and the volume point of control are skewed to the downside. So I'm expecting a test of the lows here, but probably in the overnight now, the way it's looking, but could also be towards the very end of the day. So I'm expecting a test of the lows, and to see if they can take that out or not. If they can, we can potentially trade lower. If not, we're probably going to stick in this range here. So I'm just going to fold this one back together again and then leave it at that. So the overnight, I'm expecting a test of the lows, and they can take it out. We're probably going to trade back up into a range, and then we'll see what it looks like for tomorrow. All right. Looking at the bonds, the bond has shown some strength towards the end here. It's been trading up. They couldn't take it lower. I was range bound to lower prices this morning. It turned out to be range bound, and we never really got any test of the lows here at 16. So I'm expecting a test of the lows here. I'm not sure if it's going to happen in the overnight or not, because the overnight looks like it's trading up, showing some strength. So I'm looking for a potential test of the highs here in the overnight session, at least to get started. And if they can't take it out, maybe we'll trade lower. But the overall forecast of the bond is still range bound to lower prices. Nothing has really changed on that. So the question is what the overnight is going to do. But the way it's looking now is they could not take it lower. So now probably a test of the session highs and or even higher, maybe back to 48, 9 to 11. This area up here is a high volume area and a tractor. If you folded back folded together all these distributions from the last few days, you'll see how that one develops, 9 to 11. So that could be the attractor on the upside. So we may get a test of 140.10 here before we're ready to trade lower again, but we'll have to see how that develops in the overnight. At least I think we'll see a test of 140 in the overnight, and then we'll see if that's going to hold or not. All right. So we'll take it from there. Let's take a look at oil and gold. Oil and gold. Let me see, where are you? Yeah. There you are. All right. Oil is just stalled. So it's just trading range bound. Not much going on that guy. It was range bound with a higher bias today. And it's still the same ways. The capital flow chart is pointed higher, as you can tell. It's pointed higher. Nothing really has changed on that chart. They managed to hold the line at 71.80 here. That's the high of that distribution coming back a few days. And they're trading back up. So they're holding their gains, and it's pointed higher. So range bound to higher prices on oil. I'm looking, they couldn't take it lower, so I'm looking at the overnight potential to test the highs here and see if they can take it higher. And that's what I'm expecting for the overnight, and then we'll see how that develops, right? And then look at gold. Gold is not doing much of anything. It's showing some weakness, to be honest with you, the way it's building. It's range bound, and it's been, the capital flow chart is range bound on gold, building value in this area. They have been up here, this high volume node. I haven't been able to go higher. I'm thinking that they're heading back down to 1202, 1200 now. So it's just a few bucks, but it's an area which they're going to be stuck in. So I doubt they're going to take it much higher. If anything, in the overnight, we'll see a test of the lows and or lower. So we'll see how that thing develops. But right now, the way it looks, I would say I'm expecting a test of 1200 and before they can start trading higher again, if that's what they're going to do. But we'll watch that and then wrap this up tomorrow or reanalyze it tomorrow and see what that looks like in terms of gold and oil. But gold, I'm thinking a retest of 1200 is in order now. They haven't been able to take it higher, so that's kind of what's on tap there. Looking at news for tomorrow, it's going to be a fun day tomorrow. We have the FOMC announcement at 2. That's going to be the focus of the day. But in the morning, we first at 10 o'clock, we have new home sales at 10. And then in the oil report at 10:30. So we have those two things happening ahead of time. So we're going to get some action in oil. We're going to get the new home sales. Has the potential to move it around a bit, you know. And then the big piece of news is going to be the announcement. If there's going to be a rate hike or not. That could yield a Newsday trade. So in other words, if you see a big bar in either direction, then you have a potential for, and it has to be a significant bar, not just a little bounce, but you have a directional bar, which is pretty significant, a nice reaction. Then you want to trade the continuation of that. In other words, you're looking for a pullback and a balance bar that is a bar which is formed right within the range, like right here, right? that would be a balance bar. It's formed within the range of the outside. It's an inside bar, right? It's within the prior bar. So you have a big news bar, you have an inside bar happening, and then when that occurs, you trade the direction out of that bar, and whichever it comes out of, and that's the direction you take, and then you see how it develops. So you're trading continuation, but it only works if you have, or it's only a valid trade, I should say, if you have a nice reaction to it. If you just have a muted reaction, that's not a valid trade. So you look for a nice reaction, and then you can potentially take a new day trade. But we'll discuss that tomorrow again. Right now, we are pretty much done. So we have the forecast for the overnight. Let's just wrap it up, and then we'll be back bright and early tomorrow morning and take a crack at it again. All right, guys, you have a great evening, and I'll see you tomorrow.